Standing Committee on Economics, I present the following reports together with the minutes of proceedings: advisory report on the Banking Amendment Rule Finance Reform Bill 2019 and review of the Reserve Bank of Australia Annual Report 2019 first report, and I ask leave now of the House to make a short statement in connection with the reports.
Is leave granted? The member for Rankin. Thank the member for Rankin. The member for Goldstein.
Thank you, Deputy Speaker. Deputy Speaker, on 4 Feb 2020, the Reserve Bank of Australia left official interest rates unchanged at 0.75%. In making this decision, the Governor said the RBA judged that with interest rates having already been reduced to a very low level and recognised the long and variable lags in the transmission of monetary policy, the board decided to hold the cash rate steady at this meeting. This decision by the RBA and a range of other topics were scrutinised at the committee's public hearing on 7 February 2020. The committee continued its important work in providing public accountability and transparency in the operations of the Reserve Bank of Australia. The RBA expects growth in the Australian economy to strengthen gradually, with the RBA central scenario forecasting GDP growth of around 2.75% over 2020 and 3% over 2021. It needs to be put in the context of when this meeting was held. This outlook, the Governor commented, is being supported by accommodated monetary policy, a new expansion phase in the resource sector, stronger consumer consumption and spending, and a recovery in dwelling investment later this year. Following on from global uncertainty caused by trade disputes between the United States and China, the Phase 1 deal struck between these two powers has lessened tensions and the global economy has picked up again. This is expected to help drive growth in Australia with more certainty in export markets. Inflation remains low in the Australian economy, and underlying inflation has been below 2% for around 3 years. CPI inflation was 1.8% over 2019 and is forecast to lift gradually to around 2% over the next year or so. The labour market has continued its strong growth, and the unemployment rate declined to 5.1% in December 2019. The Governor stated that he expects this to fall to a little below 5% as the economy grows. The Governor noted that most of the forward-looking indicators, including job vacancies and hiring intentions, suggest this is going to be reasonable growth over the months ahead. The Governor explained the labour force participation rate is the highest it has ever been. So even with strong growth of an average of 2.5%, the unemployment rate has come down slightly. The RBA noted that this means more Australians than ever before are in the workforce. As the economy grows, those workers seeking more hours should be able to take on more work, which will help address the issue of unemployment. Deputy Speaker, the impact of the drought, bushfires and, at the time of this meeting, the coronavirus, or COVID-19, on the economy are expected to be significant in the coming months, and that has only become clearer as time has gone on. The RBA forecasts 0.2% decline in GDP growth over the year to the bushfires, a 0.25% decline due to the drought, and at that time 0.2% due to the virus. The RBA advised the committee that the full impact of the coronavirus in particular is difficult to forecast, as much will depend on the success of various efforts to control the virus, and we note the activity on the markets only in recent days. Since the hearing, the outbreak of COVID-19 has escalated. The risk it poses to the Australian economy is slowly being revealed, particularly for small and medium enterprises relying on goods through supply chains and customers from China. Many SMEs face increasing risks to accessing stock for customers. It may take months for supply chains to fill existing gaps and provide reliable supplies. Similarly, service-based businesses face increased risks from declining demand. The consequences of the RBA's decision to lower interest rates in the second half of 2019 are also now being realised. Money is already cheap, and that leaves the RBA with limited flexibility to further reduce rates and adjust to unexpected shocks. Since the hearing, the RBA has reduced rates by a further 25 basis points to 0.5%. While initial market reactions were positive and provide a degree of confidence, this is likely to only be temporary. Reducing interest rates may build temporary confidence, but as a solution to a misdiagnosed problem, the Australian economy does not face a problem of liquidity. Deputy Speaker, the temporary challenge the Australian economy faces relates to a crunch of supply in some sectors and demand in others. In the short to medium term, COVID-19 will present serious challenge to SMEs in terms of meeting their financial obligations while maintaining employment levels. That's why the Prime Minister is right to say what we need to do is keep businesses open and people in jobs. The banking sector faces a significant challenge to reassure customers and provide flexible financing options through a serious but nonetheless temporary event. In light of the temporary nature of the challenge and with a view towards retaining capacity to readjust amidst the recovery, the RBA should consider efficacy of conditional longer-term funding options for retail banks. This would aim to enable SMEs to continue trading while the crisis is ongoing, thereby ensuring the SMEs are in the best position to maintain employment levels and lead a post-COVID-19 recovery. Doing so would also ensure the RBA does not continue tapping into the already empty well of low rates. Deputy Speaker, the committee remains concerned about the impact of low interest rates on Australians who rely on interest-bearing deposits for income. The committee will continue to hold the RBA to account on these matters for the effects of interest rate decisions on all Australians and the Australian economy. The committee will also continue to closely examine the effects of the fires, drought and coronavirus as they develop. On behalf of the committee, I'd like to thank the Governor of the Reserve Bank, Dr Philip Lowe, and other representatives of the RBA for appearing at the hearing on 7 February 2020. I'd also like to thank the Secretariat, ably led by Stephen Boyd, and because I'm in a magnanimous mood this morning, I'd also like to thank the Deputy Chair for his contributions, as well as the Labor members and the government members as well. Deputy Speaker, the committee will scrutinise the RBA at further public hearings on Friday, 14 August 2020. I commend the report to the House.